to the South African Budget 2016. Still with me, my guests in the Johannesburg studio, Adrian Saville, Stephen Schultz, and Frank Magwego. Frank, I want to come back to who actually is walking away smiling at the end of this budget. If one reads between the lines, you think Labour in particular should be happy given the developments around the pension fund and the acknowledgement of moving towards a minimum wage agreement.
Absolutely. I think one just needs to pause and really look at the fact that in December, you know, the president signed the bill, and retirement reform has been going on for over a decade. And the fact that, you know, Kosatu toy toys and right on announcing budget, you know, now we move it 2 years out. I think there's a bit of a message for me. So when you look at, you know, the state of the nation and privatization, I was quite excited in saying some bold action is going to really come out, post office, you know, SAA. But between the state of the nation address and now the budget, for me, what I'm just reading in between is really that, you know, there's this, as Adrian says, you know, you can't really go and say we're going full force privatization because there are some cabinet ministers who are strongly opposed to privatization and obviously Labour. So, you know, the example of SA Express and SA that we've been talking about, I think it just shows the fact that there is a lot of consultation that needs to be done because there's different views on how do we get the country going. So ultimately I agree with you, you know, that at the end, people are not concerned about decent jobs, in my view. I work a lot with people who are unemployed. They just want to get jobs. So the fact that now we're talking, obviously we mustn't exploit workers, you know, but the idea of a minimum wage, you know, in a country where we are growing 0.9%, 1.2 next year, NDP says to halve unemployment we need 5%. It's very concerning for me, and hence these policy paralysis that I see.
I want to stay on the point of jobs and come to you, Stephen, because when there was mention of jobs, it was generally around going leaner, in particular in the public sector, and no administrative or filing positions apparently being available, and also central authorization, I think, of provincial positions. Again, one would think that investors would look at this and say a leaner public sector would be good news, but is it lean enough?
Yeah, so look, I mean, we've got an extremely bloated public sector. So civil servants today make up 1.3 million people, and it accounts for about 40% of government expenditure. So it's a huge reality. It's easy to get bamboozled by the numbers that were thrown around today, but I can't help but feel that we're not really being honest with ourselves in terms of the extent of the problem. So Frank made mention of growth. We at MMI, our view is 0.7% this year, and we don't believe it's going to exceed 1.5% for a number of years to come. And if you look at that sort of environment, and that as an environment for raising taxes, I really don't think there's going to be a lot of tax revenue coming forward, or new tax coming on stream, bar the amnesty, which obviously will help, but probably not to the extent that they hope. And you wonder if the civil servants don't shrink as a percentage of government expenditure, how this will be funded.
But then you raise an important question now around tax, and again, you were saying during our break that even a 1% increase on VAT would have made a fundamental difference in terms of revenue coming in, and yet one would now reflect on that and say missed opportunity.
Absolutely. So I mean, just the rough numbers, if we look at Pravin's expressed desire to bring the deficit down to 3.2 this year and 2.4 next year, or 2018 rather, what that suggests is he's looking for approximately 50 billion rand, which we don't have at the moment, for 3 consecutive years. Now, if you look at VAT, a 1% increase roughly translates to 20 of the 50 that he would need to find. A 1% increase across the income bands would have given another 10. And then, you know, just to plug the extra 20, you can look to I suppose, extract a little bit more from fuel levies, from sugar, as Adrian mentioned. And you can look to save costs on the civil servant side. But failing those two, one wonders how they're going to hit the 50 billion target.
If I could just make this point, that there was a marginal tax increase that was announced today, or not announced today, and that comes in the form of fiscal drag. It is a very effective, hidden way of dragging people into higher tax brackets, that if you and my salary just keep pace with inflation, there are parts of our salary, or all of our salary, that get dragged up into higher tax rates. So you keep the tax rates exactly the same, but more and more people, or more and more money gets into that band. And as a result, you get bigger tax collections. So there was a tax increase for South Africans today. It just wasn't announced.
An unannounced tax. But here's something else that seems to not have been announced. announced. We seem to have quite a lot of, we're not ready yet to give you the details. The NHI was one of those. The Davies Committee, still waiting for outcome on that in terms of how are we going to deal with wealth tax. What kind of message does this send? We come across as we're working collaboratively as government, but I don't get the sense that we're getting the things done in time if the finance minister can't tell us what these developments are.
This is getting any types of agreements, legislation, regulation through government and then signed into law is never. This is not an overnight thing. So you should expect, this is the paper form of Medupi and Kusile. They will take much longer than you expect, and that's exactly what they're doing. They're taking their good, sweet time, and Frank made reference to, no sooner did we have something that seemed to be tabled and agreed, and there we were, and it's like, well, hang on now, it'll be deferred for another 2 years. This is the nature of the beast.
So I'm out of time, so I would like to give each person 2 seconds just to tell me what you think the headlines are going to be in tomorrow's papers. Quick and sharp, Frank.
I think for me, without a doubt, the headline I see is, here comes the ratings downgrade.
Here comes the ratings downgrade.
Yeah, so I think the big question that people, so South Africans, will reflect on this evening is whether enough was done to avoid a downgrade. And by that measure, I think the paper headlines tomorrow is going to be a step closer to junk.
A step closer to junk. You guys should change your day jobs. Adrian, that's a difficult one to follow.
So this will be really, really corny. We kicked the can down the road 6 months with the ratings agency with a fizzy drink inside of the can.
Well, I couldn't have said it better myself. The headlines, the papers, there you have your headlines. And of course, administrators and those filing positions that are waiting to be filled. Guys, these gentlemen don't need those positions. They can take up the new places in the media space. A very big thank you to Adrian Seville. A big thank you to Stephen Schultz. And a big thank you to Frank Magwegwe for joining me on Budget 2016 Reaction from the Markets. We come back to you in a moment with reaction from the business community.